Mark Selby, how you doing, sir?
I am excellent, sir. It's good to see you again this week.
Yeah, fantastic. Have you had a good week? All good?
I have had a good week. It's been interesting in the nickel front. And then this week I did once a year, there's a Toronto mining analyst group that's made up of a number of the Toronto mining analysts, and they do a annual forecast session. So I've been doing it now for 14 years. So I just did my update last night to that group.
Well,
so.
Fantastic. And you're going to share a little bit of that with us, which I'm kind of delighted about. I'm looking forward to that one. But first of all, you've got to get two things off the table. Okay. The magic triangle. What's happening?
Yeah, no, there's been a big shift in that this week. So, again, we've been kind of, going sideways here and highlighting there might be some downside risk, and that downside risk, has appeared. So, ore inventories actually ticked up a little bit the last, 2 weeks here by a couple 100,000 tons. And more importantly, though, you've seen nickel pig iron prices, even though LME prices have held steady, you've seen a big drop in NPI prices relative to the LME price over the last 2 weeks. For those of you remember a year ago, that's the kind of thing that I was pointing out really is going to, point down to a drop in the nickel price, which came to pass. So, I would say, things are going to, head down at this point for a little bit. We should see, I think we'll see the nickel pig iron price pull the LME price down a little bit here, but at the end of the day, what's happening is Indonesian nickel pig iron production is increasing, and it needs to squeeze out a certain amount of Chinese NPI to balance the market. So it's a little bit like whack-a-mole, where the Indonesian NPIs every once in a while is going to come along and give the Chinese NPI industry a bit of a thwack. And so we're going to go through one of those periods right now, which will cap out LME prices and probably push them a little lower from here.
Cool. Okay, that's the update, and it's quiet time of the year anyway, so I don't think that's going to affect too many people. I need to ask you a question though. You put out a press release, right?
Yes.
What is going on?
Yes, people are wondering, what do lock cycle tests mean? So. So we've been talking about it for a couple months here, and then I talked about extensively in November that we're going to have the first public metallurgical results out on the deposit. The reason I was talking so widely about it is because again, you do most of your work in what's called open cycle tests, and those are, you basically make it you do it straight through. It gives you a number that's very close, but not the final answer, because there's places where you want to do a little bit of recirculating to get out another, 3 or 4 percentage points of nickel, in your final number. And so the lock cycle test is what you need to publish. Again, some people do publish open cycle tests, but the real numbers are the lock cycle test with the concentrate grade and the final recovery. And again, going into it, I know what 90 to 95% of the answer is going to be. That's why I was talking about it so publicly. It was basically a glitch in execution. Again, the labs need to basically run these tests, and the lab asked whether they could combine 2 separate streams into one stream, so they wouldn't have to manage 2 recirculating loads and just have to manage 1 recirculating load. And I said, okay, as long as you don't think that's going to impact the results. And they said, no, that won't impact the results. And they ran the tests, and it impacted the results. Again, I know, 95% of what the answer is right now, but we just need to rerun the test with the 2 streams separate. And again, that's what you would do in an industrial setting anyways, if there was any kind of an impact. So we'll be getting those results out before the end of the month. It's just a matter of getting a slot and time, at the lab to be able to rerun those tests. So do not read anything, into those results. Read more into the fact that I was actually talking about them in November, if I had any real concerns about where they were going to come out.
Okay, and update us as and when you get those results back, okay? Because we're so intrigued as to what you're going to be able to do off the back of that. But I'm more excited about this bit, because you are the go-to nickel guy for brokers and institutions. Okay, you've been pumping out this forecast for the last 13 years, and you're going to share it with us. You're going to share what the big boys get to hear with little old us. So you've got a small presentation you're going to run through, and you're going to make that available to us as well, so we can put it up on the club.
Sure. This was a more lengthy presentation, so I'll just go through some of the key bits here. Yeah, so the first thing I always do, actually, because not enough, barely any commodity analysts do it, is I actually take my forecast from the end of the prior year and grade myself as to how I've done. I've done, I'd say, generally better than average, but there's been some years where there's a bunch of zeros on the page. There was a couple of years in the middle part of the last decade where Indonesia sort of caught me off a few times, but for the most part, better than average in terms of the results. The key point here, the question I was asked is, are we really at a turning point, in the nickel market? That's what the, analysts, wanted to hear. And so, sort of reflecting on that over the past month, we really are at sort of nickel's next phase here. If you go, nickel is a relatively new metal. It's not like copper and zinc that, were in the Bronze Age several thousand years ago. It was only isolated in 1750, and people didn't really figure out what to do with it really until the late 1880s. And its first real use, and most of the demand, was alloys and armor, because people figured out it hardened steel. So sort of that the first wave of growth was really, alloys and plating, and Inco came up with a bunch of new ways to use nickel because they had so much of it sitting in the ground in Sudbury. Then by the 1950s and 60s, there's, the stainless steel application really started to take off. And so, from that time period in the 50s, 60s, right through to where we are today, again, the demand in those other applications, has continued to move forward, but it's really been stainless steel that's been driving the bus for the last 70 years. And I think, we've gone through a bunch of noise in the last 2 years in terms of EVs, and I'll talk specifically, around that. But I think now you're starting to see we're starting to move up that parabolic line in terms of nickel demand from EV growth. So I think the baton is going to be passed from stainless to the EV market. Again, stainless is still going to be growing, but we're in the early days of that time period. Again, in terms of the disruption, what it was really caused, what's made it a little opaque is, China announced in early 2019 that they were pulling their subsidies at the end of June. And so what that did was cause this massive surge, in EV demand. And people were like, oh, it's up 120%. But what was really doing was just pulling demand forward ahead of the pulling of those subsidies. Once we got on the other side of those subsidies, demand then dropped precipitously, which people read into, with a various bunch of connotations. And to make it worse, the Chinese industry was kind of crossing their fingers that, the demand will come back sooner, so we don't really have to slash production. And then it didn't, and then they had to slash production. So, things got very messy in the later part of 2019 and, early 2020. So we're almost through that. Again, the year-over-year comps right now look very good because, we're versus the lows here, but we've now sort of cleared where we were before and, are moving higher here. The key thing here is around, just the scale of the demand growth that's coming. I've talked about it many times on the show. And again, Tesla's 3 terawatts of batteries, it's a 30x increase from the amount they're making today, is going to need 1 million tons of nickel on its own in a 2.5 million ton market. Most EV forecasts for the entire industry are around 1.5 million tons plus or minus. So that kind of gives you a pretty good data point that maybe the analysts are underestimating it. And again, the flurry of news that's happened over the last 2 or 3 months in the EV sector, with people saying no gas engines by 2035 or by 2030, there's been a flurry of countries make those announcements. The other key point is EVs are not just cars. Tesla is going to make tractor trailer trucks, and if you're on the road, if you're on a highway anywhere in any country, just take a look around and count the number of trucks that are out there, and you've got the Amazons and the Walmarts of the world saying, yeah, no, we're going to decarbonize our supply chain. And so, Walmart's already ordered a bunch of trucks from Tesla, and there's a huge nickel battery that goes into every one of those things. And the other point I would really like to draw is that, again, every super cycle that we've gone through, the late 60s, late 80s, mid 2000s, was all about, the industry and the analysts completely underestimating a new source of demand, just how robust it would be. and how fast it would grow. And so, I had a front row seat when I was head of market research at Inco in the early 2000s as to sort of watching China emerge. And again, I've said this before, looking back, everyone thinks, oh, China was a slam dunk. But I can tell you there was a huge number of skeptics about, what China was really going to be, right up to the point where, a bunch of metal prices were setting all-time records. And I'll again talk about, what we saw then, and just it really feels like it's the kind of same thing now that, so many forecasts are just so wrong. And again, we're at a point where, the industry is really structurally unprepared to deliver supply. Again, Indonesia's been driving the bus 100% again last year. And remember, all that NPI comes with 88 tons of CO2 stapled to it. And again, Indonesia, talk about supply causes ripples to the market. We need all of the nickel Indonesia can throw, all the NPI it wants to produce, all the HPAL production it can produce. That's the only way that we're going to come anywhere close to what the market needs in terms of nickel. Key thing is we're outside of Indonesia. Are we going to be able to get nickel? Because again, there's a bunch of consumers who don't want 88 tons of CO2 with every ton of nickel they buy. And there's a bunch of people with sizable, tens of billions of dollars of business that don't really want to, anchor their success of the business to, effectively, a Chinese controlled province within Indonesia that's fully integrated into a bunch of Chinese supply chains as, their supply of material, for their thing. Now, the other part that makes this difficult, and again, it was the same thing back in the early 2000s, what kind of obscured the China impact for a few years was, at that time we went through a significant recession. And so, rest of world demand came off at a point in time when Chinese demand was growing. And again, two things. One, obviously COVID's, had a bit of an impact on global metal demand. But then the other piece is, we are seeing, another surge here in Indonesian NPI. So things are going to feel pretty sloppy for the next year or two, which are going to let people go, oh, you know what? There's no issues. We've got more than enough supply. There's going to be no issue here. But, you just need to do the math on the medium and the long term. And, that's where we're headed. There will be some short-term noise, and I'll make a few points on a few slides as I go here. Again, this, NCM battery production, which is the main, nickel bearing batteries, they're already, so not only are we now, seeing these high year-over-year growth rates, which are off a weak base in late 2019, but they're going to continue. You're seeing good month-over-month growth, and that's when you're on a parabolic curve is when you're seeing that month-over-month growth. And then I think the other thing to highlight is, 98% of the batteries in China being made are more than 50% nickel, and a good chunk of those are 80 and 90% nickel batteries. If you go 18 months ago, 2 years ago, people were talking about, maybe getting to maybe a majority of 50% nickel batteries by now, and then 80 to 90% batteries by 23, 24, something like that. With that spike in the cobalt price, the industry said, nope, not going to do this anymore, and there's been a massive shift. And again, all the announcements over the last 12 months, really sort of pushed in to the 80 to 90% market. Again, just emphasizing, the importance of that Tesla announcement. So this was Glencore's forecast from 2018, suggesting, here was their forecast for impact on various metals in terms of the EV sector. And you can see here, in the middle, they've got 1.3 million tons by 2030. Again, Tesla alone is saying they're going to need 1 million tons. So either Tesla's going to be 80% of the market, or the market's going to be dramatically larger than a lot of people are thinking. I think I would bet on the latter rather than the former. The other key piece, that I want to highlight, again, it's amazing, and it was very frustrating sort of over the past 5 years or so of the EV battery discussion, just how much airtime was lithium and cobalt. And in fact, that, Elon Musk at one point 3 or 4 years ago said, it should really be called a nickel graphite battery, because those are the two, by weight, the two bigger components of the battery itself. On the cathode side, again, nickel has the highest energy density, and that means that gives you the most juice in the battery, and that means you can either go as faster or travel longer than batteries made by other materials. And that's why they're trying to figure out, and again, in that Battery Day presentation, they made it very clear, every battery maker is trying to figure out how to jam as much nickel into their batteries as possible. And this was one of their charts from their presentation, just highlighting that fact. The key piece, in there, in that 3 terawatts of battery production, again, a year ago, I talked about how the market was likely going to, end up in 3 different segments. And Tesla very nicely outlined 3 different segments. And again, I made it clear that, the lower end is going to be met by lithium iron phosphate. We do not need to fear it, as a competing battery technology. It will allow the EV industry to continue to grow, even though there won't be enough nickel for all of the batteries that people want to make. But, again, for a high end, where you need as much juice as possible. And again, semi tractor trailers, their pickup truck, it's going to be all nickel. They've developed a nickel manganese battery that has, basically 0 cobalt in it. That's 75% nickel. They've made it clear that that's their mid-range battery that they're going with. And then for everything else, whatever nickel, whatever, they're going to use all their nickel for these applications and then use lithium iron phosphate for the rest. So, that's the way they see the market evolving. And again, they've made it very clear, nickel is the main metal for their, for where they're headed. This is a slide. Before I started doing these in 2007, as Inco, we used to do them for 5 or 6 years. So I in 2007 sort of made reference back to a slide that we had used in 2003. Again, China was not a slam dunk. So many people left so much money on the table. If you had bought, nickel or any nickel stocks or copper at this time, copper was less than $2, far less than $2 a pound. At that time, Phelps, Dodge, Freeport, McMoran were trading at very low share prices. They were all 5, 6, 10x, and then the higher torque exploration plays, like Canada Nickel, would have been at that time. We're just these, massive, 15 to 20 baggers, from this point in time. We were pointing out, that in 2003, that by the end of the decade, in 7 years, you were going to see a 10x increase in Chinese stainless steel production and a 4x increase, in Chinese nickel consumption. Both of those were conservative. And at that time, I can tell you a lot of people just thought we were, just shamelessly promotional, that there's no way that could ever happen. China is 10 times the size or 20 times the size of these countries. There's no way it can happen. When you get fundamental market shifts, you need to understand, where it's headed. And again, it starts very slowly, but once you start to get up, that part of that steep part of the S curve, it just happens. And so, this is what's happening in the EV sector. And again, I think it's really important for everybody to do the work and get comfortable, as comfortable as you can get in terms of where this headed and what the real implications are, and ignore a lot of analysts and forecasters, because I can tell you, at this time when we were putting this out, I think there may have been 1 or 2 of the 30 very wise commodity analysts, mining analysts, who were really, bold enough to be able to sort of, make these kinds of predictions at that time. The other piece, again, everyone that's important, again, we need everything from Indonesia. We need 2.5 million tons by 2030. Indonesia, it needs to supply close to 2 million tons of that if we're going to have any hope of balancing the market, because there's just not 500,000 tons of annual nickel production available from the rest of the world, at this point in time. And so, one of the things to keep in mind is that as Indonesia is growing, it's going to squeeze out a very large portion of Chinese nickel pig iron production. So, we've already seen it, to an extent this year. So, we had 240,000 more tons come out of Indonesia, and China's dropped by 80. Next year, as again, I think we'll see some of this happen in the first quarter, because this drop in NPI prices that we talked about at the beginning, one of the big producers has already slashed production by 50%. So, I think this forecast here from one analyst will probably be, I think we could even see a number that's sub 300 by the time we're done next year, which is really going to, compress what that overall supply looks like. And again, HPAL, we need 10 plants, that are all 30 to 50,000 tons to come by 2030. And again, the issue with it, that's where we can get it, but it all comes with a very, very big environmental footprint, in terms of NPI production and in terms of what HPAL production, is going to look like. Again, it'd be nice to get some more sulfides, but because they're inherently lower carbon, we just don't have that many. That's why, again, I think the opportunity with Canada nickel is such a profound opportunity at this point, particularly at this point in time. I've talked about this before in terms of, supply is, Robert Freeland has multiple times, talked about nickel as the new gasoline. And when you look at the oil analogy, OPEC at its peak controlled just over half the market. In nickel today, 3 countries, and you could substitute Russia for New Caledonia in that mix of 3 countries that are short of cash, that have intervened in the mining sector. So the temptation, particularly in Indonesia, after the Chinese have poured in another $20 billion of investment that they can't pick up and move anywhere, to put a special export duty or special resource tax to get 5 to 10% of the revenue that's headed is going to be great. And what that means is, as in early 70s, acquiring non-oil assets in the early non-OPEC oil assets in the early 70s was a great trade. I think it'll be equally great trade for nickel assets outside these three countries as we move forward. So again, on the supply side, where's this stuff going to come from? That's the key question. We're going to get, 1 million, 1.5 million from Indonesia in that range. Where's the other 1 million, 1.5 million come from? And at a starting point, we've got the rest of the industry has been shrinking. This is just the last 3 years, but this, non-nickel pig iron production peaked in 2015. So we've been on a downward slope for 5 years. Like anything, you think of it, think of production as a big boat. It really does take a while to sort of, turn that up again. So, we're starting running backwards to try and make the supply catch up, which is going to make it hard. And again, just some real examples here, the 2 projects that are happening in Canada right now, all they're going to do is, mostly replace production that's shutting down. So there's no net increase, in production from those mines. The project pipeline we talked about part of the reason, we had the early 2000s super cycle was there was a bunch of projects that have been sitting around. So people were like, oh, there's all these laterite projects. If we need more nickel, no worries. We'll just turn a couple of them on. Again, people didn't get around to turning them on until, after the big peak in 2006-07. And again, they've been sitting around, Koniambo and Goro have been around since the early 1900s. Now, I guess both companies who did those projects would like to have maybe let them sit in the ground for another 100 years, rather than blow the $20 billion plus of capital that's been invested in those 2 assets. But again, these are assets that were discovered during prior nickel cycles, and sat there for, a very long time. We have come nowhere near to replacing, anywhere near that number of projects. There's just a handful today versus, the dozen plus that were around at that point in time. So you've got 3 types of nickel. There's the HPAL, which based on limonite, ferronickel based on saprolite, and then there's the sulfides. In terms of the saprolite, that's the less risky, making ferronickel, which is just a different type of nickel pig iron. The last 2% standalone deposit that was discovered, that had any volume of material in it, was in the early 1980s. We have not discovered a large 2% plus nickel laterite since the early 1980s. That's, again, it's not like, a few companies are going to get going, we'll find a few big deposits, and then boom, we're going to have 200,000 tons of nickel just, drop out of the sky. We haven't found anything in one of the key categories, for 40 years. And HPAL, again, Goro's got a plant already built. If you'd like to buy it, call them up and make an offer, because it's been a pretty tough sale process for them. And again, Sumitomo Metal Mining, we've talked about before, are one of the only people who've been able to make HPAL work. So again, you're not going to have a pile of investors ready to drop billion-dollar checks to build more HPAL. Sulfides are great. standard mine mill technology. They're inherently less energy intensive. The problem with HPAL and ferronickel plants is you basically have to, take raw ore and process it directly to make a finished product. With sulfides, you can make a concentrate that you can produce if you want to build some downstream nearby, or just ship. It's high enough grade now that you can ship it to processing plants that are somewhere else. And again, in today's environment, they inherently have a low carbon footprint, particularly, projects like ours, with the type of rock that it's hosted in. Again, on the sulfide front, everybody would like, and again, with all these high grade discoveries you're seeing, I think people have, they're going to be huge. The reality is the last 1 million ton, 2% plus nickel discovery, that was made, and on the sulfide side was Voisey's Bay, in the early 1990s. With the exploration that's gone on and discoveries in Western Australia, nothing has got, anywhere near that big. In fact, the two big discoveries from the last decade, were roughly 300,000 to 400,000 tons of contained nickel, which will be good enough. The entire resource is what Tesla will need in 1 quarter by 2030. That's the scale of the stuff that we need to look at. So again, to just emphasize the discovery dearth here. This was a chart Valley used in a presentation in 2015. They were highlighting, and this was a great graphical way to show it. Each of these dots is a sulfide resource from deposits, over the last 100 years. And they were saying, look at the discoveries of the current generation are half the size of what was discovered, from the 1950s to the 1970s. Our Crawford project's already one of the big ones, and we think it, could go much bigger given the exploration potential we have. But again, this is a real multi-million ton resource gap on average, that we haven't been able to fill. So, that's why I'm spending my time with large scale, low grade sulfides, is because that's the only source of nickel that you can, ramp up to be anywhere close to the scale of nickel output that that the EV industry is going to need. So, they are by nature large scale. You can scale them up. You just have to buy more trucks and buy more milling equipment, and you can produce more concentrate. Again, deposits like ours and several others, are made up of a rock that spontaneously absorbs CO2. And if they're in an area where you've got all zero carbon hydroelectricity, then great, you can actually deliver a zero carbon footprint. The other benefit, and a big one, is that you can find these in lower political risk jurisdictions, unlike most laterite deposits, which tend to be in trickier political jurisdictions. And again, there's a number of them that are close to infrastructure and have all that big infrastructure advantage. That's why I'm not drilling high grade opportunities. I looked at a number of them earlier, over the past few years. This is what the market needs. This is the next generation of nickel deposits to make that, as we make this transition to the next generation of nickel demand. These are the types of deposits that are going to help do it. Because again, the EV industry isn't going to, depend on the benevolence of, Chinese controlled entities, operating in Indonesia to provide them the nickel versus, other players in the auto supply chain. My forecast for next year, again, demand, this is going to be one of those points where, demand, most analyst forecasts are woefully low. We don't even need China to grow. We just need it to go sideways. And because the year over year comparison is so low, you're going to see a big growth in nickel demand year over year from China. I think we'll see some growth in the rest of the world. Next year, again, given what's in the pipeline, Indonesia is going to be more than 100% of supply growth again for the I don't know how many years in a row here. I think Chinese NPI production is going to get crushed a little more than even analysts are thinking to make, to make room for the NPI from Indonesia. We will be in a surplus, but I think a lot smaller than a lot of analysts are forecasting. And just like we saw last year with the first half, second half, I think we'll see the same thing here. So, we'll see prices drop down probably, maybe into the $13,000 to $14,000 range, because that's where the Indonesian NPI can really squish the Chinese NPI. And then we'll see a rebound in the second half of the year as, we start to see some, EV demand tick up a bit and stainless steel demand start to move up from the levels that we're at right now. So that's my annual forecast that I try and go and again try and pick up on some key themes that I think people need to think about, not just for 2021, but sort of over the next 5 to 10 years.
But thanks very much, Mark. Interesting, fascinating. We've talked on other programs about what does it mean for retail investors? Where should we be looking? What should we be looking for? And I think we might make some of that available in a kind of condensed form for people too, because I think that in the context of what we're seeing here, this gives me confidence that nickel is set to move next year, as we have thought all along. I want sort of some actionable components, and I think going back over some of the comments that you've made with regards to how companies move themselves forward, where they fit in all of this, is also important to perhaps go and restudy again. So just on for you guys, you name dropped Canada Nickel in there a few times. It's kind of quite clear that you have understood where you sit in the mix here and how you move things forward. So you've got a few things to deliver next year too. Quietly confident?
Yeah. Oh yeah, no. I mean, again, given my experience with a similar deposit to Crawford with Dumont, that allows us to move, a number of key pieces of this much more quickly. That's why we're going right into a full feasibility study, from a scoping study level. And again, we're working with Ausenco, I think, who are one of the best, engineers in the world for these large mine mill sulfide projects. They've got a great track record of actually delivering, and again, they're not engineers who just do studies. They actually build stuff. So in terms of, the capital estimates, operating cost estimates, since they might be on the hook to actually build it, and they'd like to build it because that's where they do well. They've done a great job delivering. So, we're fortunate to be able to work with a company of that caliber.
So, one last question. You said in there that, we're going to need all of the above and more, right? There's just not enough nickel for what is planned. So all nickel companies should do well, shouldn't they?
Yes. Oh yeah. No, all nickel. Again, if you go back, I would encourage people to look at the various types of nickel companies and sort of how they did from that, from starting around 2001, 2002 through to 2007. Everybody participates, but the highest quality opportunities, are the ones that went parabolic, and so, if you can spend the time now, to choose those winners, and buy them now, because again, nickel surprises on the upside. Just because I'm saying here, things might be a little bit sideways here with nickel, you always have to be wary of the risk to the upside. So, buy them now, put them in a box, and in 4 years from now, if you've chosen the right quality opportunities, I think you'll do very, 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 very well.
There you go. There's our end of year nickel roundup from Mark. Thanks. Appreciate your time today, Mark, and thanks very much for sharing this stuff. What were the questions from the analysts? Did this surprise them, or are they a well-educated bunch?
No. I think people are bullish on the EV story. I think what was, is just the, what the scale of the EV story could look like. There's, I think that was the part that was, the most intriguing for a number of the people.
Okay, great. Okay, Mark. Well, have a great weekend. We will catch up with you next week for the next installment of how things are going in the world of nickel. Appreciate your time.
That sounds great. Thanks. Have a good weekend.